Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Markets experienced notable volatility with Bitcoin slipping below $90,000 and regulatory clarity taking center stage. We're tracking the CFTC's landmark approval of spot crypto trading and sovereign wealth fund accumulation during recent weakness. The Commodity Futures Trading Commission made history on December 4th by approving spot cryptocurrency trading on federally regulated exchanges for the first time. Acting Chairman Caroline Pham described this as the moment Bitcoin and crypto assets can trade with margin inside the CFTC framework, with central clearing and risk management. Bitnomial is set to be the first exchange to launch under this new authorization. This creates a bifurcated market where offshore venues will continue serving retail traders seeking high leverage, while onshore regulated venues will cater to institutional players with portfolio margining that could reduce capital requirements by 30 to 50%. The approval potentially opens crypto markets to $25 trillion in assets from major brokerages, including Vanguard, Charles Schwab, and Fidelity. Bitcoin is currently trading at $89,633. Analyst Ali Martinez identified key support at $82,150 based on the 730-day simple moving average. Maintaining this level keeps the bull market structure intact. Breaking below could trigger deeper corrections. Positive signals include $805 million in weekly exchange net outflows, indicating investor accumulation despite volatility. BlackRock CEO Larry Fink confirmed sovereign wealth funds have been steadily accumulating Bitcoin, with increased purchases as prices declined from $126,000 to the $80,000 range. This institutional buying comes as major brokerages open doors to spot crypto ETF trading this week. Analysts remain divided on near-term direction. Bull theory argues the Bitcoin bull run could extend through 2027, driven by global liquidity shifts. They cite the U.S. Treasury General Account holding approximately $940 billion expected to flow back into financial markets, China's continued liquidity injections, and Japan's $135 billion stimulus package. However, expert Rect Fencer warns Bitcoin could drop to around $36,200 if historical patterns repeat. Trump's national security strategy released December 5th contradicts expectations for rapid rate cuts. The strategy mandates NATO allies increase defense spending from 2% to 5% of GDP, which could drive inflation and keep rates elevated longer than anticipated. Ethereum options traders are displaying more bullish positioning than Bitcoin traders. Ethereum's 90-day put-call skew sits at negative 2.8%, less bearish than Bitcoin's negative 4%. Ethereum is currently trading at $3,039, outperforming Bitcoin year-to-date with a 3% decline compared to Bitcoin's 6% drop. Internationally, Malaysia deployed thermal drones and smart meters to combat illegal Bitcoin mining that stole approximately $1.1 billion in electricity. Russia's VTB Bank plans to launch spot cryptocurrency trading for qualified investors in 2026, becoming the first Russian bank to offer direct deliverable trading. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.